Sound the alarm. I'm your host, Steve Van Metre, and thanks for joining me today. In our show today, markets are teetering on the brink of a crash as they race higher to a risky blow-off top. And we're going to show you just how much higher we think stocks can go, where you need to sell, and why from there they will crash. Let's head over to Goldman, where we picked today's story up. We're going to take a look at the machine positioning here, and Goldman says the pain trade in the path of least resistance still remains higher, and we called for around 4,500 on the S&P 500. They started out at 4,400, have now moved that up. And let's take a look at where the machines are positioned, because when we look at systematic positioning in these machines, we're talking about the CTAs, risk parity, vol control funds. These are all kind of formula-based funds that based on their trigger mechanisms, they buy stocks. So what we're looking for is when these machines get to extreme positions, when they bought all the way in, and then we see retail buying in and institutional buying in and hedge funds buying in and everyone's in the pool, what happens is momentum starts to turn and the machines become big sellers. Let's take a look and see, because what we can note is these machines are at extreme position. You go back a year and they have not held such an extreme position in anywhere in the near future. And what we can note is the U.S. vol control equity exposure is up 113 billion. This is an increase of 10 billion since April 1st, ranking in the 99th percentile in the past year. So again, these things are overly exposed to stocks. How about global CTA strategies? They remain buyers in a flat tape, but not a whole lot, and they remain 2x better to sell if we start to see a sell-off, and that's the warning sign. Look at this, 39 billion of exposure. This is an increase of 20 billion since April 1st, ranking in the 99th percentile over the last year. So notice this trend now. So over the next week, so going into the middle of next week, if we look at a flat tape, we're going to see a little bit of buying, notably in global equities, the most at 13.2 billion. Remember, we've talked about some of these other foreign indices are now playing catch up. Only 1.6 billion to buy in the S&P, and that's not much. And an up tape, notably flat in the S&P. What does that tell you? The machines are going to be maxed out at this point or getting very close to it. And an up tape, we're still seeing global equities bought. But look at this, over the next month in a flat tape, you see 37 billion to buy, 6.2 in the S&P, 90 billion to buy, in an up tape, 2.8 billion in the S&P, again suggesting that they're almost maxed out. But in a down tape, in a big move lower, you could see 190 billion selling. So what is very interesting, because it's telling us what we know. Machines are at the extremes. The question is, at what point is everybody all in before momentum turns? Let's take a look at TD Securities. We note now that they too are maxed out. Now looking what we see, a trigger point 44.20 on the sell side. So again, what we're going to start seeing is all these machines start to indicate where you want to sell at. And what we look at our own screens now, momentum on the S&P is positive. What are we looking for? An RSI over 40. It's at 70. It's way overbought. MACD's got a positive cross. It's way overbought as well. Momentum Timer Pro, our own proprietary report, the one at the bottom here that aggregates multiple technical signals together, smooths them out, has 16 consecutive daily buy signals on it. It's maxed out on the 1 month window, the 3 month window, and almost maxed out on the 6 month window, telling you momentum is at an extreme level here. Now back in March 30th, we had a buy it open at 404.09. Friday's closing at 439. We're now telling you again that we told you last week, tighten up the stops as markets go higher, move your stop loss level up. We're putting our target, and look, we hit that. 439.96 was our target. 438, we hit it. Our new target, 450.6 to the upside. That's the part where I think you want to sell. Looking at our own CTA modeling report, this thing's been long. I'll show you just how long it's been, where you should have been trading into this based on our report. In fact, our CTA report said buy way down here on the S&P 500. It said buy this pullback here. If you missed it, it said buy this one here. So you could have gotten this entire move. You should have been buying in way down here. All you have to do is follow our report. The links to both of them are in the description below. Our CTA report, a bargain at $30 a month. And what we're hearing from our subscribers is how easy it is. And we'll keep giving you updates on this. They say, look, I just wait for these extreme positions. Like you said, when I see the machines buying in, I start layering in and watch it go up. up. It's just that simple. But let's take a look at where we think the S&P can go up here to 450. Now, why is this? Because this is around side of resistance. And what we can note is there have been sellers up here right around 425 or 452. We see that repeatedly, suggesting that if this gets up here, what you can expect is there are people that bought this top back here. And that's what they're going to look for and say, hey, you know what? I think I'm going to sell here. I think the economy is getting weaker. This is our last final move here. You can see it looks like a blow up because it's just going vertical here. I think we get one last move, but what's going to change here going forward is the economic data is not going to validate the stock market. Stocks are trying to lead the economy higher. I think it's going the other way for the market. So look for that one final move in the S&P and jump out there. All right, let's take a look at the NASDAQ 100. Let's switch over back to our screens here. And what do we know? Momentum is positive as well. RSI is at 75. MACD's got a positive cross. Things way overbought here. Momentum Time Pro is 30 consecutive daily buy signals. Then look at this, maxed out on a 1 month, 3 month, and almost maxed out on a 6 month window. Telling you momentum is extended here. We have a buy at open set at March 30th, telling you tighten up your stops again as the market goes higher. Tighten those stops. Don't lose those gains. Friday closing 367, so definitely up on that call. Next upside target 380, downside target 350, and of course many of you know if you watch the show regularly, our CTA-Timer Pro nailed this thing over and over. It said buy down here. If you didn't buy here and ride this whole rally up, you can see 380. Our last call is up here. This is where we think you get that final blow off move. You'll note there are sellers up here from before, so remember support from the under here becomes resistance. These people that are trapped up here will look to get out. And we know the machines are going to offer no further support. You see, just like the S&P, the technical indicators are at extreme levels, again, suggesting the time to get out on this trade is now. But one thing you should get in on is our CTA-Timer Pro. What a bargain at $30 a month. Let's talk about our bond CTAs. And I'm going to give you an update next week on the CTA, our program. I'm going to show you a phenomenal trade that it pulled off. You're going to love it. But let's talk about the bonds now. There was no update, so we're going to go back to last week. We seen some CTA selling here a little bit, but notably Goldman has to say this: if there is a meaningful move lower in yields and higher in bond prices, these machines are going to go bonkers and buy in a huge way. As we look at TD Securities, we can note under 3.7% to buy, over 3.8% to sell. So the bands are getting a little tighter here. There could be a further amount of selling if this goes to the downside. But one thing that we want to note is we've seen this big rectangle pattern in the long bond. And as we come in our study of patterns, which form at reversals of price trends, remember this reversal of this long move down in bond prices, and it forms what looks like a rectangle because price fluctuates between a high and a low bound. That's what we're seeing here. Now let's look at this a little closer. As momentum on TLT yet remains positive, and we see the RSI is again over 40. We want to see that. It's at 51. MACD's got a positive cross. Momentum Time Pro, 13 consecutive daily buy signals. We're still holding our March 20th buy at open. Why are we doing? They said, well, you're down. Why not sell? Well, because we've got some trades that we're up on our calls. So if you've got some that are up and you can hold on the couple of them that are down. Next upside target, we're still holding at 106.39. No real change there. Looking at our CTA report, it's buying off of that low. We're going to show you where it started triggering this buy signal. You notice this is ahead of the machine. So I want you to understand here what the machine are telling us is there may be a little more selling, but what our program, because it runs historical overlays, say, look, these machines are going to get mispositioned. They're going to have to flip back and be buyers. So our report caught that recent bottom. We'll take a look at that in a moment. And looking at our Momentum Timer Pro, we see on the 1 month window a mid-sized position. This is moving higher. The 3 month window at a minimum. So again, starting to tell you momentum is building to the upside. And will, of course, the market follow? Well, price often follows momentum. That's why we like it so much. Here's that big move down, and it's now forming a rectangle. Rectangle is a reversal pattern to head higher. So the question is, where would you want to be buying this? Well, anywhere along this bottom here in our CTA Timer Pro, was telling us, I'll zoom in a little more, it was telling you to buy right in here. So, and then it got that gap up move, a little pullback. If this heads higher, it's got to break through this 200-day moving average, this tan line. It's got to break through the 50-day moving average. So if you missed out, don't feel you missed out yet. It's giving you the signals. If it breaks through that and the 100-day, the blue line above, now you're looking at a real rally here, potentially breaking through this volume profile line over the last 6 months and even over the last couple of years, and ultimately into a breakout above this 108.64. So if we zoom back out here to the 1-year chart, here you see that beautiful rectangle, big reversal. You want to get in on this trade at some point, but maybe wait till it breaks through the moving averages. If you want to even wait till it breaks that volume profile line. But normally, I just want you to know, our reports have been telling you this momentum move here is real and headed higher. All right, let's take a look now at gold. Remember, we're maintaining our position. The gold is going to come down to about $19.20 an ounce. In fact, I'm going to make the case of why it's maybe now headed to $18.20. I know many of you said you're going to buy it down there. Hey, that is great. Keep in mind, we're only looking at this from a technical perspective. Buying now, buyers are back potentially on machines above 1980, selling below 1925. So then sitting our target there. Notably, we keep making the call. Gold has a triple top going on. This is very important because the way you need to read this, again, as attackers come up, think of this as buyers as attackers. They come up to the line, they get rejected once. They regroup, get some more people with them. They make a second attack. They get rejected. They regroup, but that last group is weaker than the two before. It gets up to the same line. They get rejected. At some point, this whole thing heads lower. I know many of you don't want to hear that, but that's what the charts are telling us under these multiple tops and bottoms. Let's take a look at our screens. On GLD, momentum remains positive. The RSI is above 40, so 46. We got a positive cross. On the MACD, now 2 consecutive daily buy signals on Momentum Timer Pro. We don't think this is a buying opportunity, so we're saying, look, no position. We can't make short calls on this show, but remember, you might, if you're a short seller, you might want to look at that. Friday's closing 181. Our upside target is a 50-day moving average. Downside target did not move. Notably, our machine positioning picked up a little bit here just as momentum shifted. We're at a sell max at the 1 month window, which on Momentum Timer Pro, which tells us there's likely a bit of a reversal here, and that's what we're seeing. Let's take a look. So here we can see it's now, this is what's going on, split between the 100-day moving average and the 21-day moving average. It's kind of fighting in between here. Any possible rally to the upside would be to the 50-day, right where the volume profile line is over the last 1 year. Why does that matter? Sellers are all above here. That's what's key. So if the right price rally comes up here, look for the sellers to come back in. What you start to get the picture of is a left shoulder, probably a head, and then a right shoulder forming over here into that volume profile line, telling us that's coming down. Let's take a look at gold futures. Similar story here. There's your 50-day up at 1997. Our initial target at 1920 down here below. And if we zoom out to the 5-year chart, if you break 1920, you see a rapid move down each and every time. Where is that going? 1820 becomes the next target. Lots of support down there. So this is a very important top to watch, particularly if you're bullish on gold. But how about gold miners? Well, we talked about their double top could be an indication of a move higher in price, but maybe that's not the case. Let's take a look at GDX. Momentum remains positive, but barely. RSI is at 42. MACD's got a positive cross. Momentum Timer Pro pulling together multiple technical signals to smooth out the noise. 7 consecutive daily buy signals. We're still maintaining no position here. Upside target 33. Friday's closing at 31.08. So not much upside potential. Downside at 28. Our machine positioning has flipped a little bit long on the short algorithm. This is a faster running algorithm. This is a slower running one. Most of the machines are at the slow side. A few of them are at the fast side. We note that, of course, Momentum Timer Pro has grabbed those 7 consecutive daily buy signals. Let's take a look at what it was seeing here. And what we can note is here's that double top that we've been watching, saying it could be a picture of a move higher. But let's look at what's going on. Momentum Timer Pro has picked up this move here off of this bottom, this pullback, and is now saying, look, momentum's turning higher. Again, we're going to maintain this 50-day moving average as resistance here. I want you to see this. Many people fixate on this double top, but what if this is a left shoulder, head, and right shoulder forms here around the 50-day moving average, right back where that left shoulder is. Now you have the case. This isn't a double top. This is a much larger formation of an head and shoulders pattern, which signifies that the neckline is down here at 27. If that forms and breaks below 27, you have a big move lower in the minors. Again, I'm making the case where we're going to see a short move higher. If you do see that, that might be your call to take a short position on that. And let's look at the dollar, because maybe the dollar is giving us some hope that perhaps gold is headed higher. Maybe the miners are headed higher. Momentum remains negative on the dollar. RSI is at 45. MACD's got a negative cross. Momentum Timer Pro had 4 daily sell signals, but look at this. The 1 month window on Momentum Timer Pro is maxed out, and the 3 month window is at mid, and the 6 month window is at mid size. Again, not quite maxed out, but pretty darn close. We're saying no position. Upside target rather limited. It closed at 28.15. Upside at 28.43. Downside at 27.78 is what we're looking for. Again, we hit our downside target at 28.09, practically at 28.15. Our machine positioning has been selling. Look at this. It's selling. It's trying to tell you here, look, dollar has been headed lower. Our machine positioning nailed it again. Those of you that are watching that thing know, you're like, wow, this thing is super accurate. Well, it is for sure. Let's take a look at UUP and then the broad dollar index. What do we see? UUP coming right down here into this volume support zone. We see the downside. We could get a little bit lower, 27.78. Down here is our bigger view of support. Could get a little transitory rally off of the 50-day. Now, notably, here's the bull case for it. You cross the 50-day. Let's zoom in. And what you see, whoops, not that far zoomed in, and you cross the 50-day, you confirm the 50-day, and now you're talking potential rally mode. But notably, the 200-day has been a source of resistance. I'll maintain that upwards of the 200-day is still resistance until otherwise proven. So, but notably, momentum is clearly slowing here. We'll see if the moving averages offer some support. Let's look at the DXY. We can see it coming down to right around here, 107 in the 40s, or maybe even as low as the high 100s. There's your support there. Maybe it bounces off that again, but notably it's kind of, you look at this like dropping a ball. It drops, it bounces up, loses momentum, slows down, bounces again, loses momentum. If it finds support here and the next one does not regain these highs, well, then all of a sudden you're looking at a much weaker dollar here. And of course, that just tells us the global economy is indeed massively slowing down here and headed into recession. And that then validates our call that we're about to see one final move higher and it'll blow off top. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.